our presentation, we start with introduction. Brief meaning of riba. Riba refers to an unjust or unfair increase in loan or exchange. For example, someone lending Rm100 demanding Rm150 back only because of time. So that is riba. After that, we will discuss about the status of riba in Islam. In Islam, riba is strictly prohibited because it creates injustice and harm society. Effect of riba on society. When riba exists in the economy, it causes imbalance. It means the rich get benefits, the poor get suffer. It is also leads to social injustice, exploitation, and financial burden on people. Definition of riba. For number 1, specific meaning of riba. Riba means any additional amount charged without real exchange, effort, or value. In simple terms, it's when someone gains extra money without doing any real work or offering anything in return. Number 2, about riba and interest. In modern terms, riba is mostly associated with interest. For example, bank loans with interest in conventional banking. For number 3, about Islamic principle regarding riba. Since riba involves unfair gain and can lead to exploitation, Islam promotes fairness instead. Therefore, Islam rejects riba because Islam wants to protect people from being oppressed or taken advantage of.
Assalamualaikum, my name is Nurda binti Azmi. My number metric is 1252423. I will be presenting about the type of Islam. There are two main type of riba, riba al-nasiyah, riba al-fad. Riba al-nasiyah, this type refer to an extra amount because of delay payment. It's the most common type of riba in modern banking, especially in insurance-based loan. For example, a person borrow money and must pay more simply because they delay the payment. The longer they delay, the more amount will be increased. So Islam prohibited this because this causes injustice and burdens the borrower. Second, let's move on to the riba al-fard. This type refer to unequal exchange of the same kinds of gold. For example, exchanging 1 kilo of gold for 1.5 kilogram of gold, or 1 kilo of weight for 1.5 kilo of weight. Even though the items are the same types, the exchange is unfair, so it's become a riba. This applies to items like gold, silver, weight, barley, and similar commodities. So in conclusion, riba is divided into two. Riba al-nasiyah, which employ the delay payment with added charge, and riba al-fard, which involve equal exchange. Both are prohibited because they lead to exploitation and unfairness. This is all from me. Thank you.
As we can see, the reason why riba or interest is prohibited in Islam. Firstly, riba causes injustice. It allows the lender to earn money without taking any risk, while the borrower carries all the burden. Secondly, riba creates economic inequality. Wealth becomes concentrated in the hands of a few rich lenders, while the poor become more dependent. Lastly, riba promotes exploitation, especially towards people who are already facing financial difficulties. Instead of helping them, it increases their hardship. So Islam discourages riba to protect fairness, justice, and social balance. Now, let's look at the negative effect of riba in society. There are several harmful impacts. The first major negative effect of riba is exploitation. The poor end up paying more than what they borrow, which traps them in debt. Rich lenders gain money without putting in any effort. They getting benefits simply because they have capital. This creates oppression and social injustice because the financial system become unfair and imbalanced. Therefore, riba does not only harm individuals but can also damage society as a whole. The next negative effect of riba is the creation of debt cycles. People who borrow money often fall into endless debt, especially when the interest keep increasing over time. This situation leads to more poverty in society because borrowers struggle to improve their financial condition. High interest rates also make repayment very difficult, causing borrowers to take new loans just to pay old ones. So, riba traps people in a cycle of debt that becomes very hard to escape.
The third negative effect is wealth inequality. This negative effect occurs when wealth accumulates with lenders, such as a financial institution that exchange high interest rate. Meanwhile, the poor remain trapped financially for basic needs like education, healthcare, or housing, because the poor have to make a loan. When they cannot repay, the debt grows, keeping them financially trapped. This situation eventually widens the rich and poor gap. For example, low-income families may take installment plans with high interest just to buy essential items, while the wealthy can pay in cash without any added financial protection. The fourth negative effect is economic instability. When economic instability occurs, encourages risky borrowing may lead individuals and companies to make poor financial decisions. For instance, some borrowers take loans to invest in speculative ventures or high-risk streams. It contributes to financial crises, such as market crashes. In the long run, it also discourages real trade and investment. The fifth negative effect is moral and social impact. It can break trust in society from all aspects. A system focused excessively on profit encourages selfishness and greed. Eventually, it can lead to stress, family conflict, and crime, such as scam and steal.
Next, alternative to riba. Number one is murabaha. Murabaha means a sale contract between the bank and the customer. The bank purchase the item required by the customer and then sell back to the customer at a higher price. For example, the bank buy a motorcycle for 5,000 ringgit and then they sell to the customer for 6,000 ringgit, include 1,000 ringgit for the profit. Number two, mudharabah. Mudharabah means a cooperation contract between two partner. Means number one is Shahidul Mal, provide the money, and the number two mudharabi means manage the business. For example, an investor is given 10,000 ringgit in capital to an entrepreneur to open a shop, and the profit are divided 60 and 40. Number three, ijarah. Ijarah means a retainer contract for specific service or goods. This can be a pure retainer or ijarah muntahiyah, means lease to points. For example, the bank buys a car and brings into the customer with money payment. And number four, musyarakah. Musyarakah means a partnership contract where two or more partners combine their capital to run a business. profit and loss sharing based on the amounts of capital contribution or according to an agreed arrangement. For example, two partners open a restaurant. One contributed 70% of the capital and another one 30%. So any loss will be shared 70 and 30.